Good morning, traders. Hopefully, everybody's having a fantastic Tuesday morning. We got disconnected markets out there. S&P 500 just less than 1% down off from the all-time highs. You got the NDX. It's literally making fresh all-time highs, like so damn close, right? So it's even closer to all-time highs. And then poor, lonely Bitcoin all the way down here, all by its little lonesome self, struggling. Here, let me just pull this one up. Maybe. What is the problem? Whatever's going on with that tab, we'll just get rid of it. All right, there we go. So Bitcoin is obviously struggling here. This is your all-time high up on Bitcoin. You're down almost 18% down here, which is almost bear market territory. So that literally means the markets are disconnected, as Bitcoin usually trades with risk. If I pull up this indicator here, it's called a correlation coefficient. Oh, that is not it. Where did it? Oh, I gotta put it on. Sorry. I just exited the chart I was going to be using because it did not want to work. And then let me pull up the correlation. I've already looked at it, and the SPX is the most correlated to Bitcoin. If I go out to the weekly time frame, it's this indicator down here. Right there. I was looking at this for some. Okay. Yeah. So you can see here, the way this indicator works is if it's closer to the 0 spot, that means it's not correlated. At the +1, it means it is correlated 1-for-1. And if it's down here at -1, then it means it's a 1-for-1 inversion. That's how this indicator works. And you can see that it's not always correlated, right? There are parts in time where the S&P and Bitcoin start to become less and less correlated and almost inversely correlated. Well, it looks like we're having a period of that right now. So this I hate when this happens because it becomes a lot less harder to trade Bitcoin. Because if it's not correlated to risk, then that means it's going to be trading under its own merit. And if we don't know why the risk markets are bullish and Bitcoin is bearish, then it becomes a little bit more difficult to decide directional bias. Now, everybody's going to have their reasons as to be bearish an asset, right? Whatever that reason is, it doesn't necessarily mean that that's the market's reason for an asset class being bearish. And typically, the way my rule set tells me, if we're trading above the 21 exponential moving average on a daily basis, then we look for longs typically. And the same goes for the weekly and daily 21 exponential. And you can see here, we're trading below. So that means we can be looking for shorts. That's what it means. And since we're below the weekly, usually that means we are looking for shorts, not that we can, that we are. So last week was the first week that we closed under the weekly 21, and I like to give these things at least 2 closes before I start going all out bearish on Bitcoin. So this weekly candle needs to close under the 21 again for me to really start hammering on Bitcoin shorts. But right now, I have a bias, and it's because of the overall markets, because of what happened with the VIX last week. Friday, we did a public live stream that was meant to be private. I was under the weather that day, so I didn't realize that I was broadcasting to the entire world. But that day, I was confused, and I was confused as to why the VIX was up so much and the risk markets were down so little. We literally had backwardation on the VX futures. And if you don't know what backwardation means, it just simply means the front month contract is trading more expensive than the back month contract, which usually doesn't happen because the longer out in time you go, whether it's with options or with futures, those contracts become more expensive because they're pricing forward risk in along with time. Well, when the near-term contract is more expensive than the long-term contract, that's backwardation. And that means that investors do not have the ability to price in forward risk far away. So you get a backwardation. You get a very insanely volatile VIX. Well, the SIBO released a paper over the weekend talking about how now there's more and more traders, more than ever. Most retail traders and investors are trading options because their accounts are small. And now we're seeing a lot more VIX spikes that aren't being correlated with the S&P 500. So it's becoming more and more normal, I guess, that we're going to see a decoupling not only from Bitcoin with risk, but DES with the VIX, which is, becoming a little bit strange. So one could arguably say that Bitcoin should be going up, and the only reason it isn't going up is because so many people are short. That's pretty much it. You add the fact that during the VIX spike, a lot of people sold. So here you are. You have a bearish Bitcoin. It is not a bear market yet for Bitcoin. It's nowhere near a bear market for risk. Risk is at all-time highs. But could that be a first warning indication on risk? Is people getting ready to start selling risk? That is a possibility. If we come over here to the internet and we look at the fear and greed index, you can see that the stock market is showing a 30, which is fear. Well, then why is it up? Why is it up? It's only down less than 0.5% from the all-time high. Yeah, I haven't seen this happen very many times. So we have a disconnected market out there. As far as bond markets and all that is concerned, these things are trending in the right direction for bullish market. Here is your 30-year bond yield. It is going down. That is what we would expect in a bull market. This means it's easier for banks to lend money. More money out there, more easy lending out there. That means more liquidity. More liquidity is typically bullish for risk markets, especially when the Fed is in an interest rate cutting environment, and that they are. So we have all these macro checks across the board that say, hey, we are in a bull market. So it makes sense that risk markets are at all-time highs. Yeah, but here we are. We got Bitcoin, who is a risk market. It is the riskiest market, trading underneath the 21 EMA on a weekly chart. If I pull up this indicator, this is the RSI. We typically have a bullish bias on Bitcoin when it's above the 50. Typically have a bearish bias when it's below the 50. Well, the daily's been below the 50 since that Friday that caused the VIX to go ham, right? The day that Trump came out and said we were going into a trade war with China. So we've literally been bearish on Bitcoin, according to the indicators, since Friday, last Friday, 2 Fridays ago. So what gives? Again, we don't have an answer for that because we have a disconnected market. So basically, we're going to have to trade Bitcoin like that. So here's what I'm going to do with Bitcoin. I'm going to allow my bias to go against my rules, which is something traders should never, ever, ever do. Your bias is what usually gets you in trouble. You should always stick to your strategies, rules, because those sets of rules is what keeps you profitable. But since everything else is still so bullish, and the VIX is off, and the backwardation is gone, and all these things are out there suggesting that the markets are bullish still. Unless risk markets start to come off really hard in the next few days, I'm going to be looking to be a buyer on Bitcoin as long as it's trading above the July low. Coffee's good. As long as we're trading above the Q3 low, that is this white line right here on my chart. If we go out to the weekly time frame real quick, you're going to see that right now, Bitcoin is currently pushing into the 50. So it's not quite bearish on the weekly yet, but it's pushing on trying to be bearish on the weekly. Now, something I want you to notice here on Bitcoin, since 2023's opening candle, since January 2023, that is right here, ever since we've been above the 50 and came back into the 50, even if we got under the 50, that has been a buying opportunity. It has been a buying opportunity. So all of this, every single time, has corresponded to a buy the dip. This one actually took many weeks to play out. But no matter what, if you would have been a dip buyer in these areas, you would have been okay. And then here's our latest iteration. That wasn't a 50 test, but here we are. So it's definitely making higher lows. So this is the first time that we have lower lows. So right now, first thing most retail are going to say, and first thing most, I would say, Twitter people and YouTubers are going to point out is the 4-year market cycle theory. And the 4-year market cycle theory says a year after the halving, after you have a big bull run, 1 year later, you short November, December. That is the 4-year market cycle theory. I have looked at every chart, ran them myself. That's when we got bearish the last time on Bitcoin back in 2021, when that was the year after the halving, right? You got the halving in 2020, you short November 2021. We got the halving in 2024, you short November 2025. And here we're coming up to November 2025. So it does seem as if, though, a lot of retail is getting ready for that bear market, that dump. And it may come, right? I'm not one to say that things change in the market. Usually things remain the same. But when something is so easy to see, then obviously that will get priced out. So at some point in time, the 4-year cycle market theory will be priced out of Bitcoin to where it no longer works the same, where there's no edge there. And I honestly believe that this was going to happen this year, because this year we got 10 ETFs and we got 5 MicroStrategy products that act as yield delivering ETFs, right? You can buy those things and generate a yield and not need a directional bias. Sort of like buying US treasuries or bonds, right? You can do that with Bitcoin with the MicroStrategy products. And some of them generate a hefty yield, almost like 10%. Michael Saylor did that because he's trying to pull in trillions of dollars worth of liquidity. And you're not going to be able to do that unless you have a very, very healthy product and can prove that your product can last. So we'll see whether or not those products last when we get a bear market, if we get a bear market. But right here we are on Bitcoin, and it is showing signs of weakness, signs of struggle, and signs of breaking down. So there is the bell. So in a sense, for today's range, if you have a bearish bias on Bitcoin, you should be looking for shorts like somewhere in this area. So if Bitcoin is trading under this white line right here, you can be short on Bitcoin because it is below the daily 21. It is below the weekly 21. You have not made a fresh daily high. Your day high is all the way up here. All right. So you can either short where the high is of the previous 4-hour candle, or you can sell here. So either one of these two areas, if you're looking for a day trade short on Bitcoin, if you think the rest of the week is going to be bearish and this is going to be the last high, then this or here is where I'd be looking to put on that downside risk. All right. So if it fails to trade above that, I will put that risk on with you to the downside. Because the last week we had on Bitcoin was very bearish and a very easy trade to the downside. Pretty much all week long. We discussed this in depth on Sunday's live stream. So here's last week. Here's your Monday candle. This is the week open. It's the only day that week where you made a higher high and took out the previous day's high. Every other candle for that week did not make a fresh daily high. Each and every day made a lower close. Lower high, lower close. This is a lower high, lower close. Lower high, lower close. Lower high, lower close. Lower high, yes, lower close. So we're going to get something similar this week. Here's Monday's candle. Here's today's. So already today you have a lower high. Now what you're going to be working on for today is a lower close. So right in here would be the best area for the short opportunity in my humble, very humble opinion. So we're going to put on our daily VWAP here. We got our weekly VWAP already ready to go. That's the green line here. We've got our monthly VWAP for the month of October way up there. So we don't have to worry about that, as that's not going to be anything today, more than likely. So we need to be able to watch today's VWAP and see what happens here. But once again, because the markets are decoupling, or at least the correlation coefficient says that they are in the process of decoupling, even if risk markets are bullish, you can have a bearish bias on Bitcoin. Should be fun, right? Right. My problem is I don't want to take a short right here, but I probably already missed it. This is where I would have been taking my short. This is where my strategy tells me to take the short. So obviously I missed the short this morning. I just got out of bed and I put the live stream on. So I wasn't even looking at the monitor when Bitcoin was trading up here. But that is the rules to my strategy. So I need at least a retest of this level or this level, and then I can put on a little bit of downside risk. Now, I have a bullish bias as long as we're above the July open, so I don't think I'm going to take the short. But I guess if it fails to trade above those levels, why not? Right? Why not? I don't want to take the short. I want to be long, and I want Bitcoin to be going up, but it isn't, and I don't want to be looked at like an idiot. I don't want to miss any more of a downside opportunity if it's looking to go down. I'm a trader first, an analyst second. I make money by getting involved in opportunities, so I have to do what price is telling me more than what my bias is telling me. Well, my rules are telling me that I should be looking for shorts on Bitcoin, so I'm going to tell you guys that way you know that a short on Bitcoin is not a bad trade right now. It is not, unfortunately. It is weak. You are off the highs 18%. You're testing the 50 though. So that is a buyable opportunity for some bulls. Are the bulls buying Bitcoin? Well, the only thing that I can look at, or that I know to look at, would be the ETF inflow outflow meter, and that's this little thing here. Today's the 21st, so we're not going to get today's data, but we can look at yesterday's data and Friday's data, and it looks like Friday's data was outflows, but smaller outflows than Thursday, which is odd. So yeah, I said that could end up being the low of day. We'll see if it is. I don't know why that's doing that. Let me refresh the damn page. But yesterday we had 40. Oh, you couldn't give me ads, so you were mad? Figures. Yesterday was a very light outflow day. Coinbase's exchange was down significantly for a while yesterday. I don't know if that's going to have any relevance. I mean, of course it would have relevance. If you can't trade on Coinbase's exchange, then it's going to affect Bitcoin prices. If we go back into yesterday's trade, where we are right now at the New York session open, you can see that you were testing the 21 exponential moving average. We were hoping yesterday during the members only live stream that this thing would find support and continue to rally, but it didn't look good as far as the volume was concerned. And you can see here, there was a massive buildup at several price levels. This is people shorting and taking profits, right? But we've seen this and we were like, well, shoot. I typically don't like this signature unless we're pushing above the signature. Well, we never started a push above all day. You can basically see here all morning, Bitcoin stayed very sideways and choppy. And then we opened a brand new candle, which is today's range at 8 p.m., which is the Asian session open, and it literally rolled over and started dumping from that point. Boom. Here's your London session, and then the London session so far has marked the day low. So today is a little bit iffy here, guys, because your Asian traders sold Bitcoin. Your London traders bought Bitcoin. What is New York going to do? Because whatever New York does, it will dictate this day's range expansion. Right? What I mean by that, in simple terms, is if New York sells it, you will make fresh day lows, and you might continue to make fresh day lows. If New York buys it at September's open, which is a huge objective monthly level, then you will probably make fresh daily highs. So your short will not work if New York buys it. Your short will work if New York sells it. Hopefully that gives you a good enough near-term bias. Excuse me. What in the world is going on? There we go. Okie doke. So I have the way that I have my trading platform set up here on Bitcoin only. Every other asset, I have it just situated the way that it usually is situated. It's, you know, custom, or this is a custom setting. It's literally so I can take multiple different positioning on Bitcoin without ruining my original cost basis. Does that make sense? This is set up like this so I can trade around a core position on futures. So basically, I can get into a long-term core position and hold that position as long as price is trading away from the level that I am long. Excuse me for 1 second. Okay, and then basically I can scalp around the near term. So basically I can take multiple positions. Your exchange is probably set up in the way that if you are already long and you try to sell it, you will get closed out of your long position and enter a new short. Or if you're already long and you try to buy it, your cost basis will automatically be adjusted higher. That is usually how most exchanges work. Well, with weeks, you can trade around a core position. As you can see down here is my core position as we took this trade Friday live, right? We bought it together Friday. I'm still holding that trade. So that is the core position. With this position, I was awake during the London session. I said to myself, London, if Bitcoin's going to go up all week and reclaim its correlation coefficient with the S&P, then London session will most likely call the low a day. So I got long. So far, that is what has transpired, but this is a 4-hour candlestick chart, and it does not look good. It looks bad. It looks rough. So I may close out this long position and then enter a short. Maybe a short that's a lot bigger of a position size. And then just if we get down in this area, I can just let that eat the stop because the short will pay much more money than what I have currently open with this unrealized P&L. This style of trading does not usually produce very good gains because Bitcoin has a lot of fees on any exchange. It's a very expensive asset class. So it produces a ton of fees. Even if you have like a deal with your exchange, you're still going to pay a lot of money in fees to trade Bitcoin futures. So if you're not like a very, very, very good risk manager, this style of trading can get you really badly hurt. I would only suggest you do this if you are profitable. If you are not yet profitable, if you are still working to achieve that goal, I would not set it up like this to where you can trade or scalp around a core position. All right, so that's what we're going to be working with here. I did get the lower hourly swing high retest. So if I pull this line down here and drop back into the small time frame chart, I can show you that. And then this is the other swing high that we're actually looking for a retest at to enter those potential shorts. You can see how this 5-minute candle traded spiked right up into that level and held with a close. And now this candle is acting like other people shorted right there as well. Now, when I look at my chart down here and I look at the volume, you do have a spike here. These two volume nodes are showing us that people are trading this area here in gray, right? So this means a lot of people bought it. You had a lot of people also shorting it down in here, expecting a fresh day low. And then you had a lot of people buying it. So we would expect price to bounce from here normally based on this. But if it's a really bearish day, if it's a real weak day and it breaks down, then all of this volume will start getting liquidated and potentially push us beyond the day's lows, thus giving us our daily or intraday downtrend. So volume right now is showing us that we're bearish. We will ultimately and lastly, did I just delete that? I did. Okay. So what we will do is we'll pull up our cumulative volume delta. It gives us, sometimes it gives us an edge, and see what is going on intraday here. Okay, so clearly intraday, the sellers are in control of volume. We already know that because the VWAP tells us that. The intraday VWAP tells us that the sellers are in control of the day range. Your week VWAP right here is telling us that on the week even, the sellers are in control of price. My issue is we just started the week and we could be making the weekly low today. There is a lot of weekly wicks down in here. So one of my usual major rules is do not short into support. Typically, I would like the 21 exponential to be that main support, but we do have a clear and obvious candle closure down here. This is a support. Remember, your bearish candle closes are support, whether it's on a daily, doesn't matter the time frame, right? Your lowest bearish close is support. This is the lowest bearish close in regards to where near-term price is trading. Though if price was trading up in here, this candle's close would be support. But since price is trading under that, this candle's close is support. So my rules say do not short into support. And we are into support here. So it's a very, very crazy day. This would be a sit on my hands type of day, more than likely, if I wasn't already long from the London session open. But I'm telling you that it is okay for you to take the short. You have many indicators pointing you in that direction for the short. Now, unfortunately, indicators are not always 100% correct with trading and trade direction. So make sure you're using a stop loss and make sure you're not risking more money than you can afford to lose. But I've already told you, you can take shorts from 109.126 or 108.861. It's up to you how much money you put on the short and how much money you lose if Bitcoin trades above your entry, in case it does something like this, and then this, and then this, right? So make sure wherever you're putting your stop that you're not risking more than 1% total account equity, because everything works in trading, just not all the time. It is clearly bearish. The price action is bearish. The indications are bearish. You should be looking for bearish positions. Going against the grain and buying it is that's allowing your bias to take a hold of your trading, and in my experience that rarely works, right? It rarely works. The near-term trend on Bitcoin is down. There is no if and or buts about it. The long-term price action on Bitcoin is bullish. There is no if and or buts about it. The monthly price range on Bitcoin says you are sideways, and that's objectively speaking. You're up on the year. On the monthly chart, you're in a 4-month range, and July's low dictates the bottom of that range. So as long as you're trading above July's low, you can be a put seller on options if you have the money, if you can do a cash secured put. Because we already traded under that range. So right through here, objectively speaking, Bitcoin was breaking out. Right? Bitcoin was breaking down. It was breaking down outside of a 4-month range. But then what happened? Well, it snapped back, as price usually does, because price is elastic. It does slap back like that really hard sometimes. And it had a pretty deep snap back. This is much easier seen on a larger time frame chart. But here's that Friday. Then we liquidated that Friday's low last Friday. So exactly 1 week. Boom, boom. You made a fresh low. And you traded under that range. So while you were trading under here, objectively speaking, you were breaking down and you were trending. Finally. Just like up here, right? This is July's high. When you were breaking out to the upside, you were objectively trending to the upside. But the sellers came back. So now, the big question is, what's Bitcoin going to do? Is it going to stay in this multi-month range? Or is it looking to break down and start a new trend to the downside? We are 2 weeks into this trend. This is week number 3. In October, this is a month that is historically looked at for bullish breakout potential. October. Everyone was calling October at the very beginning of the month. We're getting ready to go in October. And it broke down. So very, very annoying, to say the least. But that's what we got going on today. If you are new here, welcome. We do a really good job analyzing price here, and we do take live trades, real money trades. And I don't use, large account because A, I don't want to spit in your face, and B, most of you are trading with small money accounts. So that's what we do here, and I am trying to help you grow that account. Every 2 days, we do this twice a week, live for the public. We do it 3 times a week. We're live every single day. Let's put it that way. Every day I'm live, Monday through Friday, and on Sunday as well. The only day I'm not live is Saturday. But for the public, I'm live 2 days a week, Tuesdays and Thursdays. Because Tuesdays, not anymore, but they used to be a really good day for catching weekly swings, like the weekly low or the weekly high. That's why I started trading or doing the Tuesday live stream, so we could potentially catch the week high or week low together. For 2025, that edge got priced out of the market. That edge got priced out of the market. We ran the numbers. Trust me. There used to be a huge edge on Tuesday. No more. That edge is gone. But yeah, we'll see what it does here. It does look like the sellers are definitely in control of today. I'm just looking up at the top monitor, making sure the VIX ain't doing anything crazy, and it isn't. Also, if I bring your attention over here real quick to the Japanese yen, it is also down today, and it is down nicely. So it's not just a small down day like yesterday. It is down. This is consistent with bullish markets. And then if we look at VX futures, which is the VIX, it is up today, but it's a dead cat bounce at best. As you can see, they hammered this thing last week. Yeah, I mean it pushed all the way up. It was 28. This is a contract change, I guess. Because that wick was all the way up at 28 on the day that it happened. Well, if you just look at the VIX here, top left on your screen, you can see that wick goes all the way up to 29.15. So we almost hit 30 on the VIX. That usually means the sky is falling for markets, right? It's not good. Not good at all. And on this day, here, if you bring your eyes over to top right, on the SPX, which is the cash market of the ES futures or the SPY, it was not a down day. It was an up day. But the reason it gapped up is because most of this selling took place during the London session. But nonetheless, it's still a massive rejection. It is still very much elevated. I would actually have a bearish bias on risk here if yesterday didn't do this. Yesterday took out 1, 2, 3, 4, 5 days of lows. So this is the first time that since 2 weeks ago, right? I was warning everybody because this was the resistance we've been watching all year. This is the yearly opening range on the VIX. And usually when you tag this, you want to see a rejection and then it roll over. That is consistent with a buy the dip opportunity on risk markets. But when it's gapping up and grinding resistance, also making higher daily lows in the process, you got to be prepared because this is about to happen or could happen. I didn't know it was going to happen, but I knew it definitely could happen. So I shorted the S&P because of that. And it was a good trade. So now we're doing the opposite. We're making lower daily highs. So today, we do not want to see the VIX trade above this point right here. As long as the VIX stays under 2102, we would have a bullish bias on risk. This opportunity on Bitcoin isn't a big one. I'm not even going to joke around. Just if you were able to take the entry at 108.875, and if you do get a fresh low of day, that's just a 1.26% move. We generally don't look for moves unless you can get 2% out of the move, because 2% generates enough profits to justify a take profit. A 1% move doesn't really justify a trade. And that's all we got right here is a 1% move. So make sure you keep that in mind as well. I don't think that's going to affect a lot of people. There's a lot of people that trade a Bitcoin intraday, even if it's only moving 0.5% per day. People are still trading it because it's such big numbers. I mean, if you got $100,000 account, you can buy one Bitcoin. If it moves $1,000, you made $1,000 on the day. So that's not bad, right? That's pretty good. It's a 1% move. You can make 1%. It's that simple. Oh, and gold is done. For you gold bulls out there, more than likely gold is done. Yep, gold is done. You had a gigantic pullback here last week on Friday, which suggested gold was done. So all of the emotional gold shorts, all the people that have been losing money shorting gold as gold has been going up consistently every single day, all of those people that have been losing money trying to short the highs, they got triggered on Friday. Friday started giving them very big downside candles saying, hey, hurry, short me. You're going to lose it. You're going to miss the trade. And they did. They chased it. They followed it down, hoping to see a big ass move on gold to the downside. But instead, they all got liquidated one final time as you made a fresh all-time high right here and then puked. This is going to be a very, very sad day for gold longs, probably. This thing is done, in my opinion, at least for the near term. Now, how much lower will it go? I don't know. But you've taken out 1, 2, 3 days worth of lows in one day. This, I would not doubt by the end of the day if it looked something like this. I would not even be joking when I say you could see a candle like that on gold today. A nasty, nasty candle. But it's more than likely done. I literally was thinking about taking a trade during the London session on it this morning, but the gold futures are so capital intensive, I decided not to. And I was going to short it right here. Shit. So I was watching this area for the gold short. If it rejected back under that, I was going to take the gold short. I didn't because, like I said, it was extremely capital intensive. So I was actually hoping that gold traded in a range like this all the way until the New York session. So that way I could get into GLD. But unfortunately, this happened. So, yeah, I'm no longer looking at the gold short as it just did not provide me with an opportunity. I mean, it did, but gold options on futures are so expensive. So expensive. You gotta have like $5,000 in your account just to control one contract. I mean, that's not that much, but it moves too much. You can lose $1,000 in one day easily, and that's way above what my risk tolerance is. My risk tolerance is $300. So if I can lose $2,000 on a trade, then I'm probably not going to take that trade. I was hoping to catch GLD this morning. I'm not shorting GLD all the way down here. Clearly, not taking that. But I do think gold is going to have a much deeper correction here. It could pull back all the way to 37.50, 38, and not today, but like long term, it could give back a lot of this. This is a massive move. This thing got so overdone to the upside. Here. This thing got so overdone on the weekly MACD. It was insane. It was up here at the blue line last week at 222. If I scrunch this out, you can see that the last time you got up into that was 06. Like, it's been years since gold had that much volatility to the upside. It doesn't look like it got there, but it did. we were looking at it while it was up there. People were telling me that they were buying gold in the live stream. And I was like, I wouldn't be a buyer on gold today. No way. This thing's getting ready to probably soon, in the next week or two, pull back hard. Now you're seeing that happen. On the daily, at one point, this thing was up in the 250s. 150 is massively overbought. 150, not 250. Yeah, it was way up there. So, yeah, gold is way overbought. It needs to pull back. It needs to cool off. It was so extended. It's still so very much extended, even with this gigantic pullback today. Gold is currently down 4%. Silver is worse. Silver's down 6.5% today. Yeah, the metals are done probably for this year. Hopefully that's good news for Bitcoin, right? Because if everybody's going to cash out of gold for 2024, maybe they'll come on over to Bitcoin, because there is an opportunity on Bitcoin right now, right? It's not oversold yet, but it's got there. It was there on a small time frame chart. It hit oversold. It hit oversold 2 Fridays ago. Usually those are time to buy Bitcoin. When the small time frame charts get oversold. Not always, of course, but once again, everything works in trading, just not all the time. So actually, we're getting that retest of the level that I said that I would want to be a seller at if we reject. So if we reject here, I will go against my better judgment and short it with you because the indicators say so. But something telling me that I should be long Bitcoin right now, not short. Well, not long from these prices, long from July's low prices. Friday. Should have got long Friday with me. That's when you should have got long. But we'll see what it does here. Once again, liquidating this is not liquidating the day high. The day high is way higher. Where is the day high? Let's mark it. I don't know what this line is, so let's use this line to mark the day high. Shit. I want it to be exact. We are exactamundo here. There. That high reads 567.60, so that's a lower high. 570 is more than 567. So there's your day high. So even if you get above this, you haven't liquidated anything. You've got to get all the way up here to liquidate the day high. So there's no reason for Bitcoin to trade above this stuff in here unless demand has exceeded supply down here. If that's the case, then Bitcoin will go up. And in that scenario, you do not want to be holding a short from here, because it's probably going to keep going up, right? So if Bitcoin's a short today, we want to see him reject here. We want to see a lower 5-minute candle closure. We don't want to see higher closes. Higher closes is the opposite of bearish. All right, let me read some of these comments. Good morning, Heath. Let's make that money. We always make that money, or at least we try to, right? We do occasionally not make money, but occasionally we do have winning trades a lot more often than we do losing trades. What's up, Paper Wiggleman? Ed, good morning. What's up, Oxum? Glad you can make it. Wes doing a pants check. If you're new to the channel, we do not wear pants. We are Florida boys, so no pants, no shirt, no shoes, no problem. It's balmy 78 degrees this morning here, I think. I haven't even been outside. Oh, sorry, it's 82. Yeah, the sun's been up for hours, so it's got to be in the 80s by now. But metals is a safe haven. Why are the metals stronger than anything? So something is a bit off. Not necessarily, Wes. They are traded as a inflationary hedge, but it doesn't mean it's a risk off play, right? Back in the 2008 financial crisis, gold got hammered like everything else. Nothing was safe back then. But back then, it wasn't inflation that was bringing the world economy down. It was freaking bankers. Right? So, yeah. All right, so we are liquidating the swing high made early this morning, which once again, that is nothing. We do want it. I do want it to go up. I am long. I was long Friday. I'm long this morning. So we definitely want it to go up. We bought it this morning. Here's the 4-hour chart. I bought it during the London session. So here's the long we took on Friday. And then here's the long I took this morning during London, expecting the London session to call the low of day. Once we liquidated this swing low, I was game. But we never did liquidate that swing low. So I went ahead and got game and threw a stop under that swing low. 107,377 is that low. 107,415 is this low. 415 is higher than 377. 432 says is this low. So we never did put a lower low in during the London session. These were both higher lows. But if you are joining us, these white lines are where we are watching for the short if price rejects. Clearly, price is not rejecting, so we're probably going to leave the longs on. This is your weekly VWAP. It could, in theory, reject here. This is not an objective price point, so I can't take a short here. But you probably could. I mean, you can do whatever you want. It's your money, right? I don't. It's got to fall back below here before I'm interested in a short. It has to show me that intraday weakness. If it can't show me that at an objective price point, then my intraday bias is wrong. Good morning, all, says the Agile Leader. This is what Wes knows. The bounce off of the 2024 highs since September, the bounces are getting smaller off of it. The stabs into it are getting deeper on a daily chart. Near-term daily making lower lows. Yeah, it's weaker right now than it is strong, that's for sure. But you have to look at the long term. The long-term chart, objectively speaking, if you... Like, I know it's dirty chart. It's hard to see with all that bunk going on. But this candle is the range you are stuck in. All right? So this candle is the range. So as long as you're trading under this candle's low and above this candle's high, you are still in a 4-month range. Therefore, you are doing nothing. So when you're doing nothing like this, then you apply put sell strategies and strategies of the like, right? You sell out of the money calls, you sell out of the money puts because you're range bound. That's how you make money in a range bound market anyway. So those strategies are being applied right now, thus keeping Bitcoin in a multi-month range. More people are happy with making money each month just simply by putting on a 1 month, 1 trade. Sell the out of money calls, sell the out of money puts. You also have buyers that are looking at this chart saying, well, if it can't break under July's low, then you're not trending. If you're not trending to the downside, that suggests that people are buying the range lows and in anticipation of it breaking out to the upside. Right? That's another reason why it's not breaking down here. You got to look at the long-term chart to really see what's going on. We've known that Bitcoin has been in a range since August. August, it was in July's range. Since then, it has done nothing. Yeah, it made a fresh high. Yeah, it made a fresh low. But where is it now? It's done nothing. It's not trending. It has to be trading above 123.285 to be trending. It has to be trading below 105.205 to be trending. Objectively speaking, Bitcoin is in a 4-month range, up on highs, above the yearly open, thus making it a bullish year. There's your July or your January. I don't know why I continuously call January July, but there it is. 93.223 is your year open. You're up on the year. Not big, but up. Up on the year. So it's a difficult trade for intraday scalpers right now. Unless you're really good at analyzing price, you're going to be struggling here because, yeah, it's literally range bound. I was super happy back in here when we were making fresh all-time highs. I was super happy. We had a lot of bullish momentum. Everything looked really good. Then we pulled back into the range, and then I was like, ugh. Because I know as long as we're back in the range, we've done nothing. And then boom, all the way back down to the bottom side of the range. So if you look at it for what it really is, literally all you've done is you just liquidated a 4-month range low and bounced. So that might be bullish. What we were discussing on the live stream yesterday was I can start looking for shorts on Bitcoin as per my rules go, but my concern was we were stretched too far away from the daily 21. Like I would rather look for shorts up here, but clearly the weekly 21 is what is holding price down right now. So that weekly 21, you can barely see it here. This yellow line, it's delineated by this orange horizontal line. That's your weekly 21. That's what's kind of keeping price secure down here. If it breaks out back above this and closes back above this week, a lot of people are going to switch from being bearish on Bitcoin to bullish. And that's good. And then if we look at the ETF flows, you can see yesterday was a very, very small outflow day, which suggests it's more mixed. This is a heavy sell day right here. That was Thursday. Heavy selling. This is fear. People exiting because of fear. The VIX is up. Like it's this bear market starting. But then we didn't see a higher number on Friday. That's why I said on Friday, this Thursday probably marked the low. And now, Monday, very small selling, like almost a neutral day. Like this could have been positive as far as I'm concerned. You can see that heavy selling is subsiding, not increasing. I would want to see these numbers increasing going into the lows. But since it's not, I don't really have a bearish bias here, even though my rules tell me I should. Mainly because of what we did right here. When we broke those lows on heavy selling, we should have seen downside continuation. That's typically how it works. If you don't get the downside continuation on a fresh 4-month breakout, then the sellers aren't, it's not that bad. It's not that real. It's like what we did up here. We didn't break out and get that massive rip like we did on gold, right? Like when you break out of a long-term consolidation, you typically get continuation. We didn't get the upside continuation. We didn't get the downside continuation. That tells me we're still range bound. The market is still in price discovery. And now that the VIX is coming off and gold is coming off, I think it's probably a safe bet to be looking for Bitcoin to go back up. At least back up to the daily 21 EMA, and then we'll give it a couple days to suss out direction from there. So if we come up into here and find resistance, then we can be sellers. We can short it up here if it fails to break out. Down here, it's just too low. It's too close to support. It's good stuff, man. Good stuff. We'll keep you on the right side of the market. Whether you're in a trend, whether you're sideways, we'll keep you in. We'll keep you right. The big breakdown. But here, same principle, same scenario. Let's go look at gold. Gold is a much better example here. And I only want you to focus on this right here. It's same principle, guys. Same exact principle. Gold was in a 4-month range here, a multi-month range. 1, 2, 3, 4. Same as Bitcoin is right now. And unless you're trending under this low or trending higher above this high, you are still in a 4-month consolidation range. Look what happens once gold breaks out. Well, let's just forget about it. You know what happens, right? Let me just turn this off. Yes. Boom. That's what happens on a legit break. So if Bitcoin was really bearish, this would be happening, but down here. That's not what we're getting. Not what we're seeing at all. It doesn't mean it won't happen. This could be a dead cat bounce. I agree with you, which is why my rules say I can start looking for shorts here. I would rather it come up here, but this is a failure right here. That's a failure to close above. So if it does it again today, then I will start to get a little bit more bearish. But today is Tuesday, and I have a bad habit of looking for weekly lows on Tuesdays or weekly highs based on old data. That trade has been priced out of the market this year, but the years prior, it was like shooting fish in a barrel. If the market's making fresh weekly highs on Tuesday pre-market, go into New York session, hit the sell button, you're going to make money. Boom, it was working so good. But this year, they priced that out. They got sick of me just destroying everybody, I guess. But I still have that bad habit of looking for the weekly low during the London or New York session. And it happened this morning. Tuesday, you were trading on the weekly low. Oh, London session, nice expansion away. Consolidation, it looks like New York says, okay, yeah, we like that weekly low for now. That could all change up here. Yesterday, this is where the resistance was. I don't want to sell into that, but this looks very bullish here. But you're going to see some wiggle. This is the weekly VWAP, so I wouldn't surprise price wiggle in this area for a couple hours, or an hour at least. It's less likely that it's just going to explode out of here. I would love to see it, but it's doubtful that happens. Yeah, we like buying Bitcoin in London. It winds up Sadiq Khan. I don't know what that means. I'm such a boomer. Watch for 5-minute closes under the 9 a.m. low on Bitcoin. Okay. Japan PM got confirmed today by their legislator. Yeah. As far as for the JPY weakness, yeah. But all I'm saying is if the JPY was strong with a VIX explosion like that, then I would have a much weaker, like I would be very bearish. But JPY is weak. It supports bullish risk markets. I definitely wouldn't be short Bitcoin where it was today. Like 11K. Yeah, 11K. Yeah, that would be nice. That'd be nice. I kind of like this price action because yesterday, Sunday and yesterday, we made fresh day highs both days. Right? Here's your Sunday candle. It took out Saturday's high and closed higher. It also took out Friday's high. It didn't close higher than Friday's high, but it did close higher than Saturday's high. And then Monday took out Sunday's high and closed higher. So at least the first, day of the week looked like the bulls were in control. And if you look down here at today's low, look where Londoners bought it. Just shy of liquidating the day low. So you have a higher low here. Will we make a higher high today? I don't know. We'll see. We'll see. Looks good. That's the day's high. So you did just make a fresh daily high. That is a rejection at the fresh daily high. So now you can look for potential shorts if you have a bearish bias here, but you do not want to see higher 5-minute closes. So at any point, if you're trading above this level, you could be threatening a higher high. But it would be easy to put risk on in that direction if you have a bearish bias. Your trade would look something similar to this. Then you could even target the day's low, and it would be like a 3-to-1 risk to reward now that you're up here on the day high. 4-to-1 risk to reward. Of course, you're going to have to get in. You're probably not going to get a full-on retest of that level if it's going to roll over. I don't think it is. You're trading above the weekly VWAP, but we'll see. So if you short the midpoint check of this candle and put your stop up there, it's a 3-to-1 risk to reward if you make fresh day lows today. The VXX made a day high and is backing off of the day high. Then we started the stream out saying that the markets are no longer correlated. So there's that. At least when it comes to Bitcoin and risk markets, they are no longer correlated or working closer and closer to not being correlated. And I also, because someone told me to look at the IWM with Bitcoin, that the IWM is more correlated to Bitcoin. I ran that with the correlation coefficient, and that is just simply not true. I mean, looking at objective facts, right? You look at objective facts. The S&P 500 is still and was still more correlated to Bitcoin than any other risk asset. Just not for the last couple weeks. But it fluctuates, right? It goes into correlation, it comes out of correlation. It is what it is. Yeah, the price would be 110, 114 if you were looking for a short here. Actually, the midpoint would be a little lower, 110.030. So basically, you'd be filling on that short right now if you thought Bitcoin was going to roll over today. If it's going to be bearish, this is a nice day high rejection. So if it is going to be bearish, it should not start closing higher closes. It should be done. That's the day high. There's no point to go any higher unless you're looking to liquidate yesterday's high. And if you're doing that, then you're not bearish. If you're making fresh day highs, you're not bearish, period. But you could get bearish in the future. So maybe that's where the sellers were today. Maybe that's why price spiked up. Maybe the demand exhausted the supply down here. Price runs up real fast. 1, 2, 3, 4, 5 candles. Taps into supply. Now we'll see who's winning. Who's got what? Who's got the juice? Is it the bears or the bulls? I am not short. For anybody just joining us, I am not short. I have a long on from down here and from last Friday's low. At the July low, that's the Q3 low. I'm long from here and today's low. I'm long from here and I'm long here. I have it set up to where I can trade around a core position. That's why I can hold 2 longs on the same platform. Here they are. Oh, long Friday. That's this position here. Long this morning. That's this position here. Both of them are equal in position size. And the leverage is not something I usually trade with. That was an accident. But I cannot change it while I have an open position. And I'm not going to close down this position just to change the leverage slider. So I'm trading with a much smaller position size than I normally would. Because that leverage is way too freaking high. I don't know why that would be up there like that. Obviously, I did it. I just don't remember why I did it. Must have been trying to prove a point on something like fee structure or something. But that's what we're working with for today. But the near-term trend is bearish, right? That's why I'm saying or looking to set up short-term scalps to the downside for the people watching the video, because you are bearish on the near term. You are under the weekly and daily 21 exponentials. So if you are going to see a trending move and this is just a dead cat bounce, then the sellers should be able to get it here. They got it here yesterday. It's literally where they shorted it yesterday. The weekly 21 exponential. This was the today's high, so there's really no point in going any higher from here. Yesterday's high, though, is up there. And like I said, I can't imagine making a fresh weekly high and then rolling over. It just wouldn't make sense. It could happen, though. Sometimes nothing makes sense in the markets. But yeah, it would be a similar setup to that or up here, right? You don't want to see higher closing 5-minute candles, basically. You start seeing that, then something else is going on here. As far as big movers today on the alts, we have light USDT, which is up 69% today. It is currently rocking and rolling. There's really nothing to do there. If this was a little bit higher, it's at 88.93, 88.90. If the 4-hour RSI was like at 95 or 96, then maybe we could look for a short. But clearly this thing is rocking and rolling. Don't want to short it just because. And then the next highest asset on the day is 61% is COAI. This one was up the other day as well. The other day it was up. So it has since pulled down away from those highs into a support and chilled. We'll see what happens with that. And there's really nothing that I'm interested in as far as that goes. There wasn't anything giving us a technical setup to get involved with those big runners. So I'm kind of just keeping my eye on the markets, seeing what's what. Let's see what the IWM is doing today. It looks okay. It's trying to hold support at the 100. IWM looks really good. I mean, since that Friday of that China news, the IWM's already made a higher high. I mean, this is clearly bullish. That's your all-time high. We're above it. We're basing above it, trying to find support at it. That's typically a bullish signal. The IWM could be getting ready to go on a big, nice, extended run here. But this is making some sort of an ascending channel. And typically people look for those to break down bearishly. Like pattern traders. Do have something like that, I guess you could say. I don't know how many people are watching that thing, but we'll see what it does. The SPY, this is where everybody was looking to short it. Clearly, Monday you gapped up. Everybody that shorted it on Friday were stuck going into Monday. So that helped it just gap and go. All these people that shorted were getting stopped out as this thing pushed up into fresh highs. These two highs. Today you're just a very small inside day for now. Judging by that structure, I would say it's probably headed for all-time highs. And then Fartcoin, Bonk, Pingu, they're probably going to do whatever Bitcoin does today. So once again, it's too extended away from the daily 21 exponential for me to look for shorts. I would need it a little bit closer. That's last week's open. So maybe up there I can look for rejections and shorts. But Farcoin is clearly bearish. You're under the weekly 21, you're under the daily 21. And this thing has closed many, many weekly candles under the weekly 21. 1, 2, 3, 4, 5 of them to be exact. So yeah, a little bit extended on the short. But could be a short if it gets back up there again. We'll see what happens when that happens. Same thing on Pingwoop. All of them, right? All of them. All three. These are meme tokens. We generally love to be short these. especially when all of them are bearish. But they're just a little bit extended. It's a little bit. Bonk hasn't made a daily death cross yet, so it's not really, it does look bearish, and this mad dash to the downside was an 80% downside move. Though it does look like toast. It looks like burnt toast, and the same goes for Pingu. Just too extended to look for shorts. It's basically a nothing burger. Whole lot of nothing burgers. We were looking for longs on USD Swissy, but yesterday it broke down. So maybe today I want to be, if the dollar is going to be a long trade because so many people are bearish the dollar because the macro supports a weak dollar, then I want to be long USD Swiss because the spread between the interest rates on the US dollar versus the Swiss franc is like 4%. So here's your spread, the yield curve spread. It's pretty wide. So if you hold long USD Swissy, if you get in a good enough position, you can just buy USD Swissy. And as long as you don't get stopped out, you'll get paid the carry. So you can get paid just to hold this long. The problem is it's very weak. It's very bearish. I mean, it's been bearish all year. It might be done down here. It might be done down here. If not, at least maybe we could get long. And then, you know, if price can retest the 80 level and we can stay long for multiple days, then we can at least get paid some carry to hold it long for a long period of time. But we'll see what it does today. Maybe tomorrow will be a setup for longs, or to be honest with you, that was probably the buy right there. Because here's the breakout back above the week open. There's an expansion. This is a pullback. So if it pulls back down into this area in here, I would seriously think about buying it. 79371. So in a sense, if we get a pullback into here and it holds, I'll buy the USD Swiss. Looks like a clear rejection, breakout. So any pullback into here, I'd be willing to buy it, but it looks like they front ran it. So I don't know if we'll get a pullback to here in the future, but if we do, I'd like to be a buyer there. And that's basically all I got going on. Lastly, UPS, because it did do a liquidation break again, I'm still holding this thing long. So we bought it because it essentially liquidated and bounced. All right, we bought it in here, and then it pulled back, went back down here, got this, made a fresh September low, and then it's been straight up ever since. So this looks like a liquidation break strategy play, but this is in a multi-month range here. At the very least, it's in a 3-month range. So I'm really not interested in holding longs until it starts pushing back above August's high. If we can get up there and stay above, I'm going to continue to hold the long UPS. And that's pretty much it. That's pretty much it. If you've got a potential setup or something you would like me to look at, put it in the chat. I will take a look at it for sure. And if it's if it is a setup, we'll take it together. JP, oh, I read that. Sorry. Sadiq Khan plus Trump, mortal enemies. Oh, okay. Trump so hates Khan. He's a nasty man. The world's the worst mayor of London ever. Got it. Oh, Khan is the mayor of London. I've never been to London. I would love to go. One day, maybe. Assuming Bitcoin would wick under the 50 week, how can near go? Assuming Bitcoin wicks under the 50 week. Excuse me, coffee burps. I'll look at Binance just because Binance wasn't down yesterday when Coinbase was. So here is, now one could argue and say that you're not trading inside of March's range here, but I would say that you are, right? So you were unable to close under that. So that's probably the range lows. You could go ahead and pull it down into these levels down here and say, as long as price isn't trading under those lows, then the threat of breaking down isn't there, even though you did break down. So it's doing the same thing as Bitcoin is. It liquidated the range low and then immediately bounced back up into the range. Boom. And then you really haven't been able to get back down there. Now, with that being said, the daily moving average structure here is bearish when the 200 sets above all other near-term moving averages. So on this moving average plot, I have the 20, the 50, the 100, and the 200. And then the red is just the 200 simple. These are all EMAs. I like EMAs better, because they put more weight on near-term price. That's what separates them from a standard moving average. That's why they are better, in my opinion. But anyways, it still has a bearish structure. They're all fanned out in the right direction. So this still looks very bearish. Near has a lot of work to do. It looks completely different than Bitcoin does. Even on the weekly here, notice how your weekly moving average structure extremely bearish. So something like this, I would have to look at any spike up into a resistance level would have to be met with a selling opportunity, just based on this chart. Based on this chart. Now, with that being said, can it get above all the resistance levels? Of course it can. It did over here. It did over here. It just doesn't seem to want to stay trending up like Bitcoin does. Bitcoin does the exact opposite of what this chart does. This chart makes lower highs and lower lows. It hasn't made a, wait. Yeah, it hasn't made a lower low yet, but I mean, it's working on it, right? So these two things are not the same. Bitcoin and near, not correlated, not even a little bit. But we do know that when Bitcoin is bullish, sometimes so are other cryptos. This one's struggling. What I would say to you is it's okay to hold long positions as long as you're trading above 1.799. Clearly, this would have been the best entry. So now you would just have to say, okay, well, that's the near-term weekly low at 2.05. So if at any point you trade back under this level, if it gets back above it, then you can be a buyer. But if you're trading under it, you can't, because it's threatening to run lower. But right now, it's an inside week. It's not trending. It's very sideways. Very choppy, very difficult to trade these things. Bitcoin's having a little bit of bullishness today, so is Near. Near was bullish on Sunday, bearish yesterday, bullish today. So it looks like it's trying to find a bit of near-term support. My main concern would be, what is it going to do when it gets up in here? Is it going to get sold into again? You've got a massive level, a clear, obvious level here. I mean, just look at the perfection. Look at this close. You couldn't close under it. Look at this. You couldn't close back above it. So when old support becomes resistance, this is the level it has to beat. Has to beat it. If it can't close dailies back above this level, I would be a bear. And then ultimately daily support, if you can't wait for that weekly low, daily support's coming in at 2.14. It's just the lowest daily close. That's going to be your support until you get a day close under it. This chart does not look anything like Bitcoin. Oh, see, Bitcoin's moving average, the 200 is below the 100. The 100 is below the 50. It's completely opposite. The only thing they have in common is they're both trading in a multiple month range. But Bitcoin usually is the tide that lifts all boats, right? So clearly, if Bitcoin is bullish or becomes bullish again, because the last 2 weeks it's been bearish, if it becomes bullish again, then it may help Near break out of that very bearish level of resistance. VX futures getting hammered and making fresh day lows. That's going to be very, very helpful in my opinion. Here's your VX future daily candle. You just made fresh day lows. So this is good for risk markets. Bitcoin is a risk-on asset. Would you trade the Near position into Link at current prices? Wait, would I trade into Link? I don't know what you mean by that. I did do a Link here. I think that I added on the watch list. No, just Tau, because these things were trending on Twitter this morning. It's the only reason why I even mentioned them. Sell Near and buy Link. I got what you're saying. Okay. Okay, so Link moving average structure does look better on the daily. And it looks better on the weekly. Yeah, probably. Chainlink is obviously is stronger than Near. Yeah, it is. Now, I don't have yearly gains, unfortunately. I can go look. So yearly gains, you're not even bullish on the year yet for Link. You're still bearish on the year. You're still down. And then what was Near here? Let me add Chainlink and Near just to make this easier. Okay. So there you can see it is much weaker. So right now Near is down on the year 52%. Link is down on the year 7%. So Link is stronger, objectively speaking. But I mean, we can see that with the moving average structure. Yeah, I think it's a safe bet to sell a weak asset and then buy the strong asset. Now, where are some technical levels to look to be a buyer on Link? Let me pull up my post real quick. So this was just a day trade. Okay. So I need to find this chart. Okay. So right here on link, this is where I'd want to be a buyer. 1728. That's the weekly open. Let's go back to the chart. I was telling people to buy that level if it tested it today. It didn't. Shit. Okay. I get what you're saying now. You probably saw the post. I could be... Okay, right here. It's probably too late. It's probably too late. But this looks good on the very near term. Right through here, it broke out above the 21, and now it's actually making higher highs and higher lows. It pulled back into the 21 and spent multiple 4-hour sessions here, 3 in a row, testing that 21 to be support. So the objective level that I would have been a buyer at on link would have been here or close to here. So if you pull back today or tomorrow, maybe today ends up being just an inside day, then look for retests of 1762. And as long as price is failing to trade under that level, you could do that trade. Sell near, buy link. And then this would be the last place I would be a buyer inside this weekly candles range. This trade does not go on into the future, if that makes sense, right? Because we're using this week's open. So at any point, if link breaks down below this week's open, then this trade is thrown out the window. All right? I don't want you to look at this trade next week and be like, well, Trade Talk told me to buy it at 1728. Because I'm telling you, if it tests it this week, next week, that candle's open will matter, not this candle's open. It depends on what happens this week, right? But as long as it's respecting those objective levels, I would much rather hold... Just looking at these two charts, yes, I would much rather hold link long than near. That's pretty much what your question is. And those are the levels that I would look to apply that. Unfortunately, today it didn't test either one of those levels. But it doesn't mean today's not over. There's still a whole day of trading. And we cannot predict what price will do. Right? We can't. This morning, I had no idea during the London session that I had no idea that I would make $800 today. I had no way of knowing that. None. We just don't know what the markets are going to do. So this is my profit target. I usually shoot for $300 worth of profit per day on the small account, right? It's the size of the account is justified for that much. This is my core position. So there's no point in holding this position open any longer. It's hitting my profit target, and this was the scalp. I'm going to go ahead and close that. Boom, there I go. I made my $300 for the day. 380 to be honest. So now I can wait and see what happens later on in the week. We'll see what happens. But I definitely don't want to be looking for a short here. Why not close this position and leave that other position open? Well, because the low of the range is July's low. So if Bitcoin's going to remain bullish, this position should never be threatened again. I can hold this position open indefinitely because this is a perpetual swap, or not a swap, but it's a perpetual futures contract. It never closes. I can leave this open indefinitely and scalp around this position. So money was made from the London session open, unfortunately. That's when the low of day was made. That's your low of day right there. Yeah, something was just telling me to not be bearish today, even though my rules would have told me to be bearish. Usually when my bias goes against my rules, I usually lose money. Today I didn't. Today I didn't. It is oh good. It's oh good. It's okay. Oh good. Sell near per link. Thank you, bro. You're welcome. I'm not a financial advisor, obviously, so take that under your own, like, do your own due diligence and all that. But that's what I would do if it was my money. I would always rather hold a strong asset and short the weak ones. That's typically how trend following works. You want to be long strong, you want to be short weak. Bitcoin isn't weak. It's just in a range. But most people, they don't even know what Bitcoin's doing. Like, I see so many people confused out there. A lot of people are saying the top is in. It's like, first of all, nobody knows when the top's in ever. Even when the top is in, you still won't know that that's going to be the top. But this is a good looking daily range here. Bitcoin is up nicely, almost 2% on the day. That's after being down 2% today. That's your day open right there. So Bitcoin was down almost 3% at one point today. So Bitcoin is a moving today. A lot of people on the wrong side of the market. Asia was the trap, clearly. Asia was the trap. Here's London. Oh, it started losing its daily momentum in going into London. And London bought it. And it was going to be left up to New York. What does New York do? New York buys it too, and boom, there it goes. Looking good. That's probably going to be the weekly low. I don't know. A lot of resistance up here. And the VIX is still elevated, so it's going the right direction. It's heading lower, so that's good news. Really good news, man. Yeah. Good stuff. Going down. Everything looks good. Looks okay. Big bearish move like that, that's a black swan event for sure. And typically most sellers are going to be looking for that to have downside continuation, and it still could. I'm not saying that the bears are wrong. They're just wrong today. For now. You see why I hate selling so low on the daily range? Like, trying to be a seller down in here, just, it irks me. Sometimes that's the trade to make, but only if the VIX is moving up. Typically, right? When volatility is moving up, then you want to be a bear. And you want to look for those downside ranges to be bigger. On this day right here, for Bitcoin, the VIX was moving up. Friday, October the 10th. This is Friday, October the 10th. You know what I mean? So now that the VIX is almost back down to that level, it isn't there yet, but it's almost there. Is Bitcoin going to go back up to here? That's a good question. That's a good question. Everybody is as bearish as they can be now. 3-drive topping formation, Wyckoff distribution, all that. Well, I'd say there's a lot of offsides retail positions right here. I would say most retail are looking for more down on Bitcoin when they should be not looking for down. Was confused on Friday. We had the right position though. I mean, we made money on the Thursday. We didn't really do anything on Friday except buy Bitcoin. The risk markets just were not confirming that weakness for me. And I needed to see that. All right, any other assets, any other trades out there? I guess we could go look. See what Ferrari's doing. It really hasn't decided to do anything yet. Circle's still down on the day. Circle might be a long. What? Wrong one. Yeah, Circle might be a buy. If Circle fails to close today under 129, that might be a lot. Let me go pull up Circle real quick. CRCL. Pull up the options. It's got earnings in less than 24 days. So earnings next month on the 12th. That gives us 17 days. Man, I don't like buying premium when the implied volatility is so high. The implied volatility on this thing is way up higher than I like to be a buyer of premium. I like to buy premium when the IV is under 50. When the IV is over 50, it's difficult to make money on being long premium. Oh, these options are wide AF. These spreads are terrible. At the money, the 129 call has a $1.65 wide. At least this one ain't as bad. It's still almost like it's still 70 cents wide. I typically don't trade anything wider than 40 cents. If it's wider than 40 cents, I don't trade them. So I'm not going to jump on that. Look at the puts, dude. Ugh. An at the money put has a freaking $4 wide spread. Who's trading this thing? People are trading it. There's no open interest. That's ugh. I wouldn't trade that. Nah. I would trade the shares. Buy shares, not premium. If you can close the day above this level, I think you can be a buyer of shares on Circle. Here's my concern. There's a double bottom here that did not get liquidated. You are bearish on the daily. You are bearish on the weekly, but you are extremely extended. That little divot right there is your 21 exponential moving average. That literally means that this is the 22nd weekly candle for Circle. 20 bars. Okay, whatever. That's your weekly 20. It's extended. It held weekly support. But this is a double bottom. So this is where the risk is. So what I would simply say is if you're trading under 128.91, 128.56, leave it alone because you're probably going to 122.83. Now, if it breaks below 122.83 and gets back above 122.83, then I could buy shares. But I can buy shares here at 128.46 or 56 as long as today doesn't close under that price. So I would basically just be watching it here, not being a buyer just yet, knowing that there's a risk of liquidation down here. So it's not a buy just yet, but it is a watch. It's definitely a keep it on watch. You're welcome on Cake, Agile Leader. What's Joby doing on the daily? Joby trying to hold the 21 exponential here. Still too early in the day to call that a hold. That's not even the price I would be worried about. As long as it's trading above that, I would be okay with it. Joby is a drone maker / light airplanes. There's some people in this space that think that this company will be worth a lot more money in the future because they're trying to put together like a taxi service for flight from like middle city to airport type of thing. Now, there's never been a business for that, and there's, I'm sure, a whole lot of bureaucratic red tape to cut through to make a business like that. But a business like that is in the future for sure. Why take a 65-minute cab drive to the airport when you can pay a little bit of extra money for a 10-minute flight to the airport, right? There is a business model for it. Can it be profitable? Yeah. Once again, bureaucratic red tape. Though this is a long-term speculative asset, technically speaking, it looks like it's trying to accumulate here. It looks okay. Unfortunately, it's range bound. As long as it's under $20, it's range bound. It's in a 3-month range. So knowing that, I could be a buyer at 14.15, not way up here. If Joby pulls back to 14.15, I could be a buyer here. And that is, of course, if it's not trending below there. If it's trending below there, then it's coming to test this level. And then I would have to wait to see what happens after liquidating that swing low. I would much rather be a buyer there. So, do they have options? They do. They even have weeklies. Oh, and there's premium on the puts. So, yeah, I could sell 12s. There's not a lot down there. But if price pulls back on the chart, that premium would get a lot more expensive. Oh, wrong. Oh, if price pulls back to this region, that premium will get a lot juicier. And then I would be very willing to sell puts under 1270. Excuse me, sorry, I could not get to the mute button quick enough. That's Joby. Highly speculative play. We've already looked at UPS. Zoom did not do what I wanted it. Oh, wait, yeah, I did. It totally did. I missed it. It's no longer, it's a nothing burger now. Oil, unfortunately, we did have the shorts for this thing. It just stopped us out through here. Ultimately, it ended up, or was it over here? I think it was over here, actually. We were looking for it in this area, I think. I don't even think it was on this asset, actually, now that I think about it. Anyways, we did have a short side bias on it. It broke down. We missed it. BABA pulling back, finally. Okay, so now BABA is starting to consolidate. This is good. Ooh, it did a midpoint check as well. And it's trying to hold. Looks good. Yeah, daily support. If that can hold, I could be a buyer on BABA. 159.01. It's got to hold daily closes. If it loses that price, then it's breaking down. It's looking for a deeper retracement. That monthly open could be threatened at 134.38. So as long as it's being able to withstand trading above 159, I could be a buyer on BABA. It's a fresh breakout. It's making higher highs and higher lows. It's a good looking chart. It's a deep correction, deep enough. So now it just needs to set in this range for a little while longer while it discovers price. And if it could do that, then I could be a buyer here. If at any point it breaks down, I would be looking for it to come down to here. Which at that point, we could then be a buyer again. So we just have to wait. It's not a trade today or tomorrow or anytime this week. XLE might be a short here. Not yet, but it could be. Oof. It's literally like so close. XLE. Yeah. Yeah. All right. I'm going to try a short here on XLE. I'm going to buy a put. If it closes today above 86.88, I'm exiting that put. I'm going to buy that 31 days out. Just right at the money, the 87 strike. All right, it's sent. I didn't get filled, but it's sent. So here's the thing. Intraday resistance. Pretty easy trade to mitigate here. If you start closing 30-minute candles above this candle's price, which is our price that we're watching, then you can bounce. There's 10 minutes left on this candle. You can simply wait to see what it does. It's a bullish engulfing right now as it stands. If it closes down here, it'll be a bearish engulfing. So you could technically wait another 10 minutes to see how this closes. If it closes as a bullish engulfing above that level, then wait. Don't put it on yet. It could be a better trade up here. if it rejects in this area. So maybe keep this on watch today. If it looks like it's going to start to roll over, then maybe send it. It looks like a rejection from lower prices. Yesterday was bullish, but kind of looks like a bear flag to me. So you could just wait for the breakdown if you wanted to and look for the short. There's a couple different ways you could play it, but it might be setting up. Might be setting up as a short today. Bitcoin looking real good. This thing needs to cool off a little bit still. I don't know if this thing's ever gonna stop. For you guys that don't know, this company, they are OTC. Oh, it's a very dangerous investment, but Kraken Robotics, this is like one of the only trades right now into Anduril, which is a weapons company that is not a publicly traded company yet, but soon will be. So because these people make batteries for Anduril drones, the submarine drone, I think. So the reason this chart is exploding to the upside is because people are buying it as a play on Anduril. So it's getting a bid based on the fact that they received contract to supply Anduril with batteries. It's a good looking chart once it got the contract. So once you get above $5, money managers are going to be able to start dipping their toe in. Above $10, and this thing could fly. I hate buying stuff at highs, though. I like buying dips. I mean, you're at all-time highs up here. Like, it completely extended. This, for me, is not ever a buy. This is a take profits zone. If you bought this thing at $2 or $3, you might seriously think about taking some profits. Now, obviously, if it starts to short squeeze from here, it could go much, much higher. I can't even pull this up on a free website like FinViz to tell you what the short float even is on this, because it's a 5-letter OTC asset. But I'm keeping it on watch just so that way I can buy it if it ever pulls back and goes into a consolidation. That's the only reason it's on watch. And then Archer's another play on drones. Most wars are calming down, except for the big war, Russia, Ukraine. This company caught a bid probably based on that. Yeah, that's all I got. I don't really have nothing else. I'm going to give Bitcoin a few days here to continue to rip shorts faces off. See what happens. Really liking that move there. Yeah, really liking it. Looking good, Bitcoin. Looking good, baby. Yeah, you smoked yesterday's high also. So this is something else. This is something else. Bears once again getting caught off guard on the wrong side. I'll wait on that XLE. It hasn't got filled yet. All right. We're going to wrap it up, guys. Pretty much we're just going to wait and see what happens with Bitcoin. Then we'll start to look and see if any of these things, once they get up into areas of potential resistance, we'll start to look to put shorts on the weak ones, the ones that are bearish. Like Fartcoin, it is bearish. It's going to catch a sympathy bid because of Bitcoin today. And probably because of Ethereum. We didn't look at Ethereum. Let's go look at Ethereum real quick. Bitcoin's actually up more than Ethereum on the day. So here's Bitcoin. You're up 2.0. Well, you were. Ethereum's up 1.97. Bitcoin's up more than Ethereum today. So Bitcoin has a bid. It's Bitcoin that has the bid, not Ethereum. Which means dominance is up. I don't like a short on Ethereum, not as long as it's holding the weekly 21 as support. See, with Bitcoin, it did give you that close last week. Which is why this week was going to be important to see if last week was a trap or not. So Ethereum, you still kind of have a short play on Ethereum. It doesn't look like it's a short today, maybe. It's just a hop, skip, and jump away from being a bullish engulfing daily off of support. So you might see continuation from a play like this higher. I guess the next major objective level to watch for resistance would be, well, first it's going to be October's open here. And then if you get above that, I would not be looking to be a seller at all. So the next level to watch for Ethereum is here. The October open, 41.45. I don't know that it'll be a short, but that's where the volume weighted average price is for the month of October. So if the sellers are truly in charge of price here, it shouldn't go any higher than that. If you are going to see, you've already put in a lower low on the month. So the sellers need to see a rejection here. If they can't hold that October open, I wouldn't want to be a seller. That may come into play later on today. I don't think I would want to get involved with it today, but maybe tomorrow. So going back to Bitcoin, what does it look like? Same thing. Same thing. This is insane. Shorts are getting pummeled today. That's a bullish, almost. It's not quite. $449.91. Yes, it is. You did liquidate yesterday's low on Coinbase. You didn't on weeks. On Coinbase, you do have a bullish engulfing or an outside day reversal. Huge bids coming off of that 200 daily. Yeah, Bitcoin has like 4 or 5 days like this. It'll be right back up in the all-time highs in no time. Good stuff. You guys have a fantastic rest of your day. Be safe out there. Make sure you guys trade safe, trade smart. Happy trading, everybody.